You're probably still taking losses because you don't understand your daily bias, and in this video we're going to go over exactly what you need to simplify your daily bias and trade in the correct direction instead of trading in the wrong direction because you don't understand your daily bias. We're going to go over a live chart on gold, and we're also going to go over some analysis that I sent out to the signals room on this gold chart to catch this move up, all starting from finding the correct daily bias. So the first thing I want to get into is what the market is looking for. And this is liquidity, seeking liquidity, either taking it or creating liquidity. And the second, fair value gap, or specifically rebalancing into fair value gaps. Now for the basics, liquidity is literally seen as old highs and old lows in the market. Buy side liquidity is resting above highs and sell side liquidity is resting below lows. And the basics of a fair value gap is literally 3 candles. So as you can see, we have candle 1, candle 2 and candle 3 over here. There was lots of buying pressure in this second candle, in this middle candle, as you can see right here. So we call this a buy side imbalance and a sell side inefficiency, because there was lots of buying pressure to the upside but not enough selling pressure, creating this gap. As you can see, to the left there was no wicks and to the right there was no wicks. And similarly for the bearish fair value gap, as you can see, we have candle 1, candle 2 and candle 3. So we have 3 consecutive candles, lots of selling pressure, so sell side imbalance, and there was less buying pressure, so there was a buy side inefficiency, and therefore we call this a bearish fair value gap. And as you can see, if you just mark this out, you can see price almost tapped into the consequent encroachment, which is 50% of this exact gap. Now let's get into the basics of looking for the daily bias. So to start off, what time frame do we choose to get our daily bias? Now you can go to the weekly time frame if you want to get an overall view and start analyzing from there, or you can go down to the daily time frame to see the candles in a bit more detail and to see structure a bit more clearly. But first of all, what we're going to look for is these 2 things right here, liquidity and fair value gaps. So what I want to point out is this fair value gap right here. Now you might be wondering, what do I mean by how is it seeking liquidity? Where do you even spot the liquidity? As you can see, prior to this fair value gap, which was created to the downside, you can see price made 1, 2 and 3 candles, all relatively in the same area. So we call these relatively equal highs, right? So we're going to mark out this point right here, and above this level, above these 3 candles, there's going to be liquidity that is created. So above this point right here, there's buy stops, right? Then as you can see on this green candle right here, price took out them highs to the left. So it swept 3 days worth of buy side liquidity before then reversing to the downside. So as you can see, we have taken liquidity to the upside, and second of all, we got that reversal to the downside. We got a fair value gap which was created. Well, now that you know the liquidity has been taken to the upside, so that's one reason for why we are bearish. Now that you know we have a bearish fair value gap which has been created, so that's another reason why we are moving to the downside and seeking lower levels of liquidity. Then we can go ahead and drop down to the lower time frames to then look for our entries to the downside from specifically this point of interest which has just been created on the daily time frame. And the third thing I want to point out is overall structure, overall order flow, right? We want to be trading in the correct direction, so we don't want to get caught up on the wrong side of the market. So straight away, just from looking at liquidity and fair value gaps on the daily time frame, we've determined our bias, which is to the downside. Then if you drop down 1 time frame lower to, for example, a 4-hour time frame, you can go ahead and start to look at your structure from a wider perspective. And then you can see, okay, we are impulsive to the downside, and right now we are starting to pull back up. Where can we pull back up to? These are the sort of questions you should be asking yourself. If we're looking to refine this point of interest which we found on the daily time frame, we can go ahead and look within this point of interest on the 4-hour time frame or on the lower time frame, whichever is clear. Now straight away, what stands out to me is first of all the consequent encroachment of this fair value gap, and in particular this fair value gap, this 3 consecutive candle pattern that we see on the 4-hour time frame. So there's even more reason for price to rebalance into this daily fair value gap, and also in specific this 4-hour fair value gap which price has created before we see a potential move to the downside, which lines up with our overall daily bias. And then as you can see, price does wait around for a bit, but as you can see, price does tap into that fair value gap right there, so it does rebalance into that fair value gap, and then as you can see, we get that nice move to the downside. And again, similar concept, seeking liquidity and rebalancing into fair value gaps. What have we just created underneath this low right here? We've created sell side liquidity. So after price took out those highs, made that impulsive move to the downside, we found our points of interest or our areas of interest in this daily fair value gap. As you can see, price rebalanced into this fair value gap in particular, and then again back to what I was saying at the start, with the market is always seeking liquidity after creating a fair value gap or rebalancing into a fair value gap. And then price moves to the downside, creating that lower low which we got right here, and also taking out that sell side liquidity that was resting below this low.
You will pass your funding challenge in under 14 days, 100% guaranteed, or you don't pay a single penny. 98% of traders fail their funding challenges, spending over $4,500 on average, so don't let that be you. We've helped hundreds of people pass their funding challenges even if they failed many times before. Look at our track record. We passed Tim's funding challenge even though he had no prior experience. Carl got funded $100,000 in trading capital and made over $2,000 in profits in his first month. You can get funded with prop firms and get access to capital anywhere from $10,000 to $400,000, and you can keep up to 90% of the profits. It's a zero risk investment. If we fail the challenge, you get a full refund. However, we've never failed a challenge, so you will be funded 100% guaranteed. Get on this whilst it's still available. Click the link and take action now.
Again, as you can see here, a more recent example, this is actually an area that I called out for the signals room in the weekly market breakdown video on gold. And if you haven't joined the signals room already, go ahead and join. It's literally $30 a month. The price will be increasing very, very soon. We've got a proven system, a proven high win rate strategy, so make sure you go ahead and join and take advantage of the signals room. And also don't forget the mentorship will be coming out, so you can get one-to-one support, and the value in there will be absolutely insane. So I can't wait to release that for you guys. I've been working on that for a while after loads of requests, so I will be releasing that very, very soon. Now back to what we were saying on the daily time frame on gold. What have we just created? So as you can see, with these three consecutive candles, candle 1, candle 2 and candle 3, we have just created a bullish fair value gap, right? So as you can see, there was lots of buy side imbalance, so lots of buying pressure, but not enough selling pressure, creating this big impulsive push to the upside. And in addition to this, you can see we have taken this high out on the left, right? So even more reason for price to start moving to the upside. And these are all confluences contributing to our daily bias being bullish. At the end of the day, we're looking to trade in the correct direction. Now back to the concept of liquidity. Again, yes, price did take this high out. Does that mean that price is bearish now? No, because we've just created this bullish fair value gap. And in addition to looking at the liquidity concept, you can see we have this old low right here, and then we got to move to the upside. And this is the first fair value gap that has formed on the daily time frame since we have taken this liquidity to the downside. Make sure you take your notes, guys, because there's a lot of gems in this video right here. So now that we know we have created a bullish fair value gap, we have taken liquidity to the downside, and we also are taking out structure or previous levels of structure to the left, we can identify that we are in a bullish scenario right now. So now that we've formed our bias, let's look at the opposite side, the flip side. Let's look at our targets. Have we got liquidity as our target, or have we got a fair value gap as our target? Now, as you can see, price has created this high right here. What's resting above this high? Quite simply, buy side liquidity, right? Again, you can see we have this high and we have this high right here. So these are all levels of liquidity. After price rebalances into this fair value gap, if it does, we could go ahead and target further levels of liquidity, such as this high right here, this high, or this all-time high which gold created, and it did end up taking out. Now, we don't need to drop down to the 4 hour to look at our structure, but again, if you do want to look at your structure in more detail, you can see the impulsiveness to the upside. So as you can see, we got that tap into the fair value gap right here. It tapped into specifically the consequent encroachment, which is 50% of this fair value gap. And I'm telling you guys, this is a very, very important point. Make sure you guys are taking notes. So as you can see, it did tap into that fair value gap, specifically the consequent encroachment of it. Could we see a higher low from this area? Could we move to the upside? And as you can see, price did exactly that. It took out one high, and you can go ahead and mark out your other highs that we've created on the left right here, and you can expect these to be potential targets and to be taken out. And as you can see, price does exactly that. It moves to the upside. Now looking at the live price action, you can see price has taken out those levels of liquidity, but now you can see we're getting a massive impulse to the downside. Yes, price did create a fair value gap right here, but as you can see, it's rebalanced that. FVGs are magnets for price. You can see price moved impulsively to the downside. So now that we've taken out these highs right here for the live and current market, we've got on the flip side as our targets. Well, straight away, I can see this fair value gap right here. So I'm expecting this area to be filled in potentially on gold if we don't see a rejection from this area right here. But if we are looking for sells and we are looking to trade to the downside, I would look at this old fair value gap right here as a potential point of interest or area of interest to potentially look for sells from in this area right here before we start seeing further movement to the downside, rebalancing into this bullish FVG which we had on the left, which is going to be used as a potential target. And remember, again, you can go ahead and drop down to the lower time frame, such as the 4-hour time frame, the 1-hour time frame, if you do want to look at structure in more detail. But again, I want to keep it very simple on the daily time frame to look for your daily bias. And remember, the lower the time frame you go, the more chance there is of you being faked out. But sometimes you will need the lower time frame to look at intricate details and to look at specific structure. But to get your daily bias and your overall direction, you do want to be staying on the higher time frames, because this gives us our overall lower time frame narrative. I hope this video has helped you guys out. If this has helped you, I want you to drop a like and comment down below. Make sure you subscribe to the channel. The membership will be released very, very soon, so make sure you stay tuned for that on my socials. And I do post the trades that I'm taking or the analysis that I'm looking at on the Signal Zoom. And if you also want some free analysis, make sure you go ahead and join the free Telegram community. I'll leave it linked on the screen right now, so you can go ahead and join. All the links will be down in the description below. Make sure you drop a like, comment and subscribe, and I'll see you in the next video. Peace.